What does it take to back the next generation of breakout consumer brands, the Coteries, the Goodles, the Parallels, before they become household names? Today, I sit down with Amanda Schutzbank, co-founder and general partner at Willow Growth Partners, one of the most active early-stage investors in consumer goods and wellness. Willow was founded in 2020 with a simple thesis: back founders building enduring, emotionally resonant brands that improve people's lives, not just quick fads chasing short-term growth. We dive into how the consumer investing landscape has evolved since the 2021 boom, what truly defines a great asset at the seed stage, hint, it's not just growth rate, why community and general emotional resonance are now as defensible as distribution, how founders can think about venture-backability, platform potential and staying power, and where Amanda sees the next wave of opportunity, from Gen Alpha to longevity to science-backed beauty. Whether you're raising capital or rethinking what sustainable growth means in 2025, this conversation is a masterclass on investor discipline, founder psychology, and building brands that last. Amanda, so starting Willow in 2020 during COVID, all the craziness, then the immediate spike thereafter where everyone was at home and ordering and trying new things and flush with cash because the market was ripping and government was handing out money. Fast forward a few years, things seem very different. How's your investing lens evolved over the last few years from kind of call it 2020 to 2021 to now?
Yeah, it's a great question. We've definitely been hit over the head with what feels like headwind after headwind after headwind since starting this fund. So as you said, we started this fund back in January of 2020, right before COVID hit. And, who knew that we were going to get hit over the head with that one? But yeah, we started this fund with the lens of health and wellness. We really felt like the consumer was shopping that way and they cared more than ever before about health and wellness more broadly. And then, of course, COVID hit, and that just further fueled that thesis for us. And, fast forward to a few years, we've seen a ton of great brands come into play, but we've also seen the consumer have to deal with all of these things, inflation and tariffs, and it's just been a tricky environment. But yeah, to answer your question, I would say, back in 2020, 2021, we saw a lot of great deals. A lot of great brands were being started. We saw the M&A markets, just a lot of deals getting done there. Super frothy, multiples, lots of deals getting done. And then now fast forward, we're seeing a lot more slow and steady pace, I would say. So we see private equity funds are sitting on a ton of cash. All the strategics feel like they're waiting for the best asset out there. They're not doing not a lot of volume, but kind of waiting for the biggest and the best. And that's definitely trickled down into our world. I'd say we've been way more disciplined and stayed disciplined over time, really holding out and waiting for the best assets. But really for us, I would say a lot of what we set out to do that I just mentioned of kind of focus on health and wellness, focus on consumables, brands that really fit into the consumer's everyday life and had that clear repeat still holds true. So we've never wavered from that, which has been remarkable for us. And we've stayed still focused on investing in the same categories, focused on brands that have really strong underlying fundamentals. So strong margin profiles of, identifiable paths to profitability early on, and have continued that over the last 5-6 years. And we'll always be investing that way, which I think is the way to go.
You said you want to be focusing on great assets. In pre-recording, you were saying kind of maybe in that $2, $3, $5 million revenue range. You mentioned great margins. What are other what's the great asset? What's the dream asset that lands on your desk that you're like, hey, stop everything. Let's, put some pen to paper.
Yeah, that's the key question, right? The $1 million question. Yeah, it's a lot of things. It's not one thing in particular, I would say, but as some of our portfolio companies, fast forward, some of them have become household name brands, right? It's remarkable in a very short period of time. We were the very first investors in brands like Coterie and Day and Bubble and Goodles and Parallel, which is now becoming quickly a household name. So it's been remarkable to see. And I would say, what gets us really excited? It is, yes, it's all of those things. They need to have strong underlying fundamentals, a margin profile that works, right? Like if you're operating with 20% fully loaded gross margins, you don't have a business. So we're definitely hyper focused on that, but we also are looking for brands that can build platforms. They really lean into community as their moat. They lean into building a brand that resonates with the consumer on an emotional level, and it's something they almost feel like, I can't live without this. It has changed my life in some way. I need to tell my friends about this, right? And that translates across the board. And then I'd also add true product differentiation. Like if you think about Coterie as an example, that brand came to us. He had spent 2 years fully reinventing the diaper from the ground up. I touched the product. I had a little baby at home at the time, and I was immediately blown away. Like even just by feeling it, I could tell it was 2 times more absorbent than any leading brand and whipped the water away faster. So it was like fewer diaper rashes, but also just was a softer, more premium product. And I thought that was a remarkable first start. But what he did that made the brand the incredible success story it turned out to be was he layered this highly emotional brand on top of it, right? It became a status symbol of some sort if you were walking around with your baby with the Coterie diaper. And that is something that is really hard to knock off. Like there were a bunch of fast followers, but he had built such a cult-like following, such brand love and enthusiasm. And that's really, I think, what carried through. And you saw that in the retention numbers. And ultimately, as you saw the news a few weeks ago, the brand sold to Mammoth in an incredible acquisition. And that's just a testament, I think, to all of those things kind of coming together and working really well.
You talked about the ability to be more of a platform, to have the resonance, and I assume the platform meaning that, it can jump off at a few different points in terms of product expansion and channel expansion. But are you expecting to see that at the early stage when it is hitting your desk, or is it more like, hey, I think this has the potential to kind of attack a big TAM?
We're definitely dreamers and believers. I like to envision the future, but it doesn't have to exist today. So no, we don't look, we invest in brands doing 2 to 5 trailing 12 revenue. So there is no way you could have gotten a fully fleshed out platform delivered to us at that point. What we get more excited about is how the founder thinks about building that vision over time. What could it look like? What products will live in that suite of products? And will consumers love those as much as they love the first, V1, V2 of whatever you're building? And so we definitely like to help with that. I would say that's a great place where we get in and we get involved in terms of shaping what that platform could look like over time. But we're certainly dreamers, believers as it comes to that. We don't need it to be there at that moment in time.
To go back to whether it's Coterie or someone else you want to choose, just around that brand resonance, Coterie being kind of the premiumification, if you will, of diapers, having the status symbol, I think is a great heuristic of a product in a new category. But you did mention fast followers, and that's one of the increasingly harder challenges of the last 5 years, that there are so many new entrants, so much easier to start a brand. How were they able to stay ahead of the curve? How do you advise your portfolio companies to stay ahead of the curve when fast followers is a real problem?
Yeah. And our companies are definitely laser focused on what they set out to achieve. Like we back incredible founders that have really strong vision. So they tend to ignore the fast followers, rightly so. But yeah, if I had to name another example, I mean, I would say Goodles is a great example, right? This is a brand that took on a sleepy legacy category of mac and cheese, right? You had Annie's and Kraft basically dominating the market. But when we first saw Goodles, and this was back in 2021, Annie's had been a 30-year-old brand at the time. And I think a lot of us forgot that, right? They slapped the word organic on their products, and we were like, okay, it must be better for our kids because of that. But it really was a legacy brand at that point. And Goodles came in and they just modernized the product. They took a product that you know and love. They didn't completely shift it on its head. Instead, they just made it slightly better, right? They have higher protein, lower glycemic index, packed with kind of nutrients and minerals in there. And they just took the product you love and know as mac and cheese and made it better. And then they wrapped an incredible brand ecosystem around that. Like if you immerse yourself in that brand, you feel it is so fun, it's vibrant, it's loud, it's celebratory. You just love being a part of it and the mission behind it. And I think that you have to kind of have all of those things wrapped together to be a really successful platform and brand. And that's a brand that I think has now become a household name, has staying power. And if someone were to fast follow them, which some have tried, it's just kind of noise around them at this point. They've really cemented their spot in the market as the best mac and cheese for you out there right now.
Does it have to be kind of the first or relatively early in that category? And what I mean by that is I have a friend who's launching an RTD protein, let's call it, I can't remember, 15 to 18 grams, but it's oat milk first rather than dairy first. And I was just jamming with him. And unfortunately, I've become naturally a bit more of a skeptic over time. And I just said, like, look, when I'm in Target, Whole Foods, whatever, like there are 12, 15, 18, I don't know, like, you know, some dozen plus 15-gram protein RT and like oat first. Yeah, like I guess there's an audience for that. And like, and also his kind of branding and it, you know, it's kind of, you mentioned Goodles, like it's fun and younger and more colorful.
Yeah, I hear you. I mean, look, the skepticism is real. We see thousands of deals a year. So you can imagine our skepticism. The bar is high, I will say that. I mean, if you ever want to be disenchanted, walk through the aisles of Erewhon out here in LA, and you'll just see a sea of sameness of all the better for you products you could possibly imagine. So yeah, I do believe first mover advantage is real. Like you've got to make a statement. You've got to come to market with something new, differentiated. And it could be a tweak on form factor, on ingredients, and the storytelling around that, but it can't just be more of the same. And particularly in beverage, as you mentioned, it is very, very hard to stand above the noise in beverage. There's just so many out there. So we tend to try to find these diamonds in the rough that can build a platform, kind of stand in its own territory a little bit, and be able to just stand above the noise in whatever category they're playing in.
Can we just touch on growth rate for a second in that early stage? Had a different founder reach out and said, look, you know, let's call it around that 5 million in revenue, raised a very disciplined amount of, you know, family and friends money, but had been at it for maybe three or so years. And I think growth over last year was maybe only 30%. And I shared with them, I was like, look, at a 30% growth rate and not at a 100% growth rate, this is going to be much more challenging because the bar has gotten so high. Yeah, can you speak to growth rate and kind of what is venture-backable?
It depends on the category, right? Like we're super disciplined in how we think about things. And yes, of course, when we see 100% plus growth rates, we get super excited, right? Like there's just meaningful resonance with the consumer. People are excited. I would say we care more about what the cohorts look like and what the repeat data looks like. And we understand sometimes these brands are bootstrapped and you didn't have $5 million of marketing to throw at the ecosystem and blast the world about what you were doing. And so I focus less on that. If we see a brand that's growing and it's pretty exciting and the underlying community of the folks that are purchasing the products are fired up and they're coming back, and that's really exciting and interesting to me. And then your kind of point on what's a venture backable business. I actually talk a lot about this and think it's very important. Founders often come to us. We live in the CPG world, so lots of these brands are great lifestyle businesses. And I know the work you do, you see this too, right? And they may be great cash flowing businesses. They can be great businesses that you hand down to future generations. It doesn't necessarily mean it should be a venture backable business and that you, as the entrepreneur, should take capital from institutions. And I always try in what we do to kind of educate folks on that as well, because you have to remember when you take outside capital, especially from the funds and the institutions, they want a return on that capital. So they're expecting you to get to the finish line, whatever that may be, right? Whether it goes to a strategic in an M&A process or to a financial sponsor, but they need a path to getting their money out and have it be a great multiple that looks great for them and their fund return profile. So, if you're building a brand and you kind of feel like 20, 30 million is the ceiling on the revenue that you're going to hit, that's not that exciting. And so you really want to think about, can I build a brand that has a real platform that it can extend itself into multiple different SKUs and multiple different types of products and build it with a path to 100 million in sales? And if so, is there a buyer at the other side of the table that would naturally want to own what I'm building? And if so, then ask your investors, how big is your fund, right? And what does a successful return look like to you? Because oftentimes what we see is, if you raise money from a firm that's multi-billion dollars under management, they need a multi-billion dollar return for it to be meaningful for them based on whatever ownership they own. And so you've got to kind of dig under the hood and really understand who you're taking money from. First, identify, is this a venture-backable business? Do I need outside capital? And then, are these the right partners around the table? Because if they're not, it will definitely, no matter how great of a business you build, you may never see kind of that successful finish line.
We talked about some of the incredibly attractive attributes of Coterie and Goodles. Are there maybe one or two other brands that the audience can learn from in terms of either early signals that stood out or ways that they've continued to scale?
Yeah, I would say Parallel is probably a really great other example. So this is a brand that's in the women's hormonal health space. They're focused on different life stages in the women's hormonal health journey and started with fertility. So they focused on, conception packs and trimester specific packs at the start. And they've now extended into other categories like menopause and added a whole bunch of other products like protein and other powders around the suite of products they offer. I would say this is a brand that really, really built around community. And I love that about this brand, right? You are targeting a woman that is dealing with something that's very stressful for any women out there who've ever gone through fertility. It is a deep, dark black hole of information, and you're just looking for anything that you can trust and anything efficacious. And Parallel was able to provide products to that woman at a moment in time that she really needed them and be a brand that they could trust. And we saw that through their retention metrics. Like, this customer was incredibly loyal. She was coming back. She was switching from pack to pack. And then after she was, done having her baby, she was going to the motherhood suite of products. And it was just incredible to see the positive feedback we were getting from customers, how much this brand was just a part of their DNA and how they were telling their friends about that. So I always go back to community at its core for the brands that stand out to us and how they're able to stand above the noise.
Let's kind of talk about community and mission, because I think it's as you said, underpins a lot of what Willow does. What are some tactical things that you've seen work building community? Is it kind of content? Is it Facebook groups? Yeah, well, what are some best practices?
Yeah, I would say, interestingly enough, our brands do it in a lot of different ways. There's not one size fits all with this. Some folks do super micro influencers that are getting the words out to their specific communities. Some, of course, we have our fair share of kind of more celebrity oriented brands, but those really only work when it's really authentic and true to whoever that person is. But that's also a great way to sometimes leverage community, build community. Others are, yeah, they're doing Facebook groups, mom communities, especially when it comes to kind of the Coterie and parallel groups. Um, we have a really interesting new investment that I'm very excited about called Aloria. I'm not sure if you're familiar with this one yet, but it's a fragrance brand, a Korean American heritage brand, inspired by all the lovely things about the Korean culture. And it's a beautiful, beautiful brand. And what they're doing to build community is they have offline locations, so retail locations, one in New York, one in LA, and one that's opening up in Seoul. And they're actually driving their community into their doors. So they're hosting different events with local artists, local musicians, a tattoo artist recently. They're bringing them into the door to celebrate Korean Americans in general, and the heritage and the beautiful culture, but they're also driving other people in as well to learn about this culture. And I love that. Like, I love the idea that they're leveraging other people to bring in more people into their brand. It's a phenomenal, kind of interesting, unique strategy that's not just, scaling on Meta like many other brands have done in the past.
And something that you're able to get behind because maybe the attribution is a bit more opaque. It's not quite kind of like you said, the Meta, hey, we can measure all the way down the funnel.
Yeah, we're looking for. I look. You have to stand above the noise in some way, and I think the days of just scaling on Meta are over. That's spending all your dollars on one channel like that is just not an interesting strategy for us. So we want people to be diversified. We want them to be on multiple different channels, and we want those channels to kind of be working in tandem together. And I think that's where the magic happens. But for sure, we definitely don't love the businesses that are fully reliant on paid. Like, there has to be that organic lift and it has to be meaningful for it to be interesting and have staying power.
What about founders and kind of leadership patterns that you're looking for? Are your founders typically the front facing, all over the socials, at these kind of activations? Are they a little bit more behind the scenes and kind of know all 15 sheets in the model inside and out?
We have all different types of founders. So I would definitely not say there's one that we gravitate to the most. I'd say all of them, though, the ones that are successful, and we've actually recently dug a little bit deeper on here and tried to figure out what are brands that are most successful. What is the through line about the founders that made them that way? And I think these people are incredible executors. They stay incredibly disciplined. And another thing that keeps coming up is they're incredibly decisive. So these people can make decisions and move forward. Maybe they made the wrong decision. That's fine. They move backwards and fix it. But they don't waver and waffle in the unknown of like, oh no, what do we do? Like, this is so hard. What do we do? Instead, they can just make decision, live with it, make decision, live with it, and just keep going until they get somewhere. And I think that reflecting back on the incredible people we've partnered with, that's the secret weapon that I think they have. I'd also add to that, they hire incredible teams. I think teams are what drives these businesses forward. And our greatest founders can hire people around them that they believe are smarter, better than them, and let them go do their thing. And that's where the magic, I think, really can happen.
I'm a big believer that market dictates. In fact, it's all about the market. You would now have a pretty decent sample set. You've done the analysis to find a through line of founders. I imagine that, the baseline Willow founder is a, 8.5, and the best one is a 9. And, the standard deviation's not that big, but your outcomes would be orders of magnitude different. Yeah, is that just the ephemeral product market fit and the kind of impossible to predict velocity? Or yes, actually, like when you've done the analysis, there are executional things being done differently at your top quartile versus, median brands?
No, that's a great question. I do think it comes down to execution. Like I really do. Like the people I see that can just out execute, outwork, put the hours in, break down walls, break down barriers. They just don't take no for an answer. They tend to succeed. Now, of course, if you don't really have product market fit or you're still kind of figuring that out, or let's say extend your product line in a direction that maybe the consumer wasn't that excited about, that can also kind of fill that bucket and maybe not make you that kind of complete outlier. So it is a bit of a perfect storm. But, after we invest and we've spent a long time thinking about should this exist and does the consumer want this to exist? And we've seen the early proof points, it does really come down to execution.
Are there a couple of ways that you or Willow more broadly really like to engage with a portfolio company? Is it, hey, we have our roster of retail buyers, or we have our internal Willow Slack channel for our portfolio company? Like, what are ways that are fun and useful for you to help your brands?
Yeah, we're a small team. We have myself and my partner, Deb, who started this, and two junior folks that are with us. And we kept it that way on purpose. We're both former operators. We don't have large systems in place. And there are many funds out there that do. And especially the funds at the next stage after us have great platforms. They have internal recruiters and things like that. Where we really play is helping that brand get from that 2 to 5 mark to kind of that 10 million in top line. And that's when they really go and raise that Series A. And so where we focus is a lot of early core team building. Like, how can we put the best players around you at that early stage? And we're helping with a lot of ops and infrastructure. Like, do you have the right FP&A person around you? Do you have the right counsel around you? Oftentimes, the answer is no for those two things. And then we're helping a lot with what you said earlier, product roadmap, marketing, the consumer sentiment, where we think it's headed. And again, we're investing in these brands. We were doing things in 2020 that are household names today, 2025. So we're having to kind of predict out to the future. What do we think? Where do we think these markets are going, and try to help a lot there. But yeah, we try to see ourselves as an extension of the team at that point, at this early of the journey, and we're really here to help. And I think, of course, once they raise that next round from a great partner, the dynamics change a bit and the needs change a bit. But that's really where we play. And sometimes they come to us and they're in a great distribution kind of retail channel, and sometimes not. And we will help them at that stage of kind of their first retail partner potentially, and what does that look like? But yeah, that's pretty much where we play in the ecosystem.
Is there a tactic, channel, or piece of tech that's working especially well for your portfolio right now?
I would like to say there was a magic bullet, but I don't think so. What people are focused on a lot right now, I can tell you Amazon has been a huge focus right now across the board. I mean, you've seen the numbers on Amazon just taking over beauty share. I think they're going to get up to like 15% of the share of beauty, which is just remarkable. Even 5 years ago, that was not part of the conversation, right? We were like, don't go on Amazon because it's dilutive to your brand. And, why would you want to be on that channel? Now you have to be on Amazon. You have to be there. You have to own it, and you have to do well. So I think that's a big focus right now. TikTok is also a big focus in figuring out, for some brands, TikTok Shop and how relevant that is, and leaning into the great creator community there. But really, it's the talk of the town is AI and AI tools, and how to internally make your teams more efficient. So I think that's where most of the conversation is right now is what are our teams using? How are they leveraging them so that they don't have 50 FTEs on the team? They can do this with 10. And so it's remarkable. I think, one of our brands that's probably our fastest growing brand right now said we will get to, let's see if this happens, but we will get to 100 million in sales with 10 FTEs. And I'm like, I think it's doable in this day and age. So I'm excited to see what people can do with lean teams, just given all the speed of which all these AI tools are changing and how that will change over time.
Without necessarily giving away any of the internal research secrets, are there any trends or consumer behaviors that you guys are looking for, regarding investment areas?
Oh yeah, I talk about this pretty openly because we are very thesis driven, believe it or not, even though we're early stage. So because we see everything, we're often looking at why doesn't this exist? Like there's a gap in the market here. Someone should go and build it. So if anyone's building it, please come our way. But a great example is Gen Alpha. I have three little kids at home. I'm obsessed with this generation. I think they are savvier than any of us. They grew up completely online. They grew up with AI and they will continue to grow up with AI at their fingertips. And their shopping patterns and behaviors will not match ours in any way, shape, or form. So I'm very excited to see how that generation evolves. And I think, we invested in Bubble very early. Bubble is doing very well targeting even Gen Z, kind of younger millennial skincare. But I think there's a wide open gap right now in hair care, and someone will do it. I think hair care for that Gen Alpha, Gen Z, even demographic will be done. Personal care for Gen Alpha in general. We talk a lot internally right now about longevity. Like, what does that mean? How does that translate? The GLP-1 movement is, I think, here to stay. And, we've on the back of that, we've seen protein everything. And I think proteins jumped the shark a little bit, but there will be other implications on longevity and health and looking kind of inward at that. And I think there will be more products to come from there. So people operating in that space, we're super excited to meet. So yeah, I think all of those things, and I would probably add science. Like we are hyper focused right now. It's a little bit more broad, but science as it translates into the VMS category or beauty, even personal care, the market has shifted that way. The strategics care about the science. They're acquiring assets that have real, deep, meaningful science. So this consumer wants efficacy and they want to understand the clinical trials and they want to understand the science and they're not taking no for an answer. So we're definitely looking at brands that can have true product differentiation and real science incorporated into them. And that does get us very excited.
Yeah, amazing. What's your biggest piece of advice for founders heading into 2026?
Yeah, well, I'm remaining optimistic for 2026, and I hope that the M&A markets will bounce back in terms of volume, but we'll see. Yeah, I would say, stay laser focused on building exceptional brands that have emotional connections with consumers and not a flash in the pan product that will be gone tomorrow. And stay diligent on the fundamentals. Like, don't, have strong margin profiles, really work at them, build products that can be long lasting and have staying power. And then, more good will come from that than just kind of trying to get a quick, fast hit in this rapid changing landscape of which you can do that. I think the brands that will be kind of generational brands and have that staying power will be the ones that focus on those things.
Amanda, as we head towards a wrap, you've already talked about the types of brands you want to be hearing from. Is there anything else you're seeking from listeners? Any other types of brands? Any operators, collaborators?
Yeah. So we just closed our second fund, which we're thrilled about. That closed about a year ago, actually. And we have 5 amazing portfolio companies in that fund, but we're looking to do more. Love for any great brands to come to us. We'll probably do 15 or so more brands in the next couple of years. And so we are excited to meet great founders that have strong visions and can bring the next generation of brands to the world. So that's really our ask is just we're open and we're excited. Our new check size is about 2 to 4 million in an initial check, but still staying focused on that seed round, that kind of first institutional round. But we're excited to really partner with brands, have meaningful ownership, and sit side by side with them as they build great things.
What a great call to action for all the brand founders out there. Amanda, thanks so much for coming on and look forward to next time.
Thank you. Thanks for having us.